Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, March 12th, 2010. Well, folks, here we go again on a crazy day on Wall Street with the markets gapping substantially higher, only to sell off sharply and come all the way back down. They sold all the way off to the negative side, and then just like that, the spigot was turned off, the volume dried up, and the markets have gone sideways here on out. Now, look at this amazing market analysis. I mean, you just talk about a market that's primed for the drop, but then can't succeed based on the fact that there's no volume left in the market. Take a look at this. Again, the market gapping higher today. What was the reason behind it? Retail sales. Retail sales coming out. Decent retail sales. Also, the dollar was getting crushed. Whenever the dollar drops, folks, look at the dollar today. Gapping down, continuing on its negative path, and that again helping prop the markets up. So all of these factors contributing, especially those retail sales, which came out a little stronger than expected. Now, bottom line is, folks, you gapped higher up to the 116 level. I talked to the premium members of the Research Center yesterday to look for that 116 level. Pre-market, we went to about 116.10, 116.15. That was a prime level I isolated on the charts for them last night. It was also where I picked up a beautiful little shorting opportunity by buying the SDS. Bought it right there at 31.80. On the SDS, let's take a look. This SDS again, look it down all the way down here. Here's your 31.80. I picked it up pre-market. Look at the move it had off of that, all the way back to 32.30 and up and sideways, choppy, and just kind of holding there. But nonetheless, a very solid move on the SDS, already up a good 30 plus 35 cents on that SDS play, as again, the market came all the way in. And profits can be taken whenever you wish, obviously, on a trade like that when you're in the driver's seat in the money. All right, now going back to the SPY, let's discuss a little bit more. Number one, again, the fade. Look at this beautiful fade. You had a big drop candle here, red candle. Look at the bars, 1, 2 inside bars. You should all know, anyone that follows the In the Money Stocks methodology, that is an in spirit of bear flag pattern. Off that in spirit of bear flag pattern, look at the drop that took place. This was on the Michigan sentiment numbers. Michigan sentiment numbers came out at 10 a.m. Eastern time and were not quite as good as the market expected. So that put a little extra emphasis on the downside in the market, as the market gave up all the pre-market gains, coming all the way back to a flat line ratio here with the market. So sure enough, you came in, actually went negative to the point where the market was down a decent amount, nothing crazy, but a nice little fall here into the 20 moving average. Now, the interesting thing about this 20 moving average, it also coincides with a master level. What master level was that? The 115.14. Guess what the low on the day was today, folks? 115.14 on the SPY. Guess what the 52-week high was until the last couple days, going back to January? What was the high hit in January on the SPY? 115.14. Think about it. Amazing. This kind of stuff happens. It's the symmetry of the markets. You got to understand, folks. Sure enough, that was the low. We talked about that as being a buying opportunity in the intraday stock chat. Sure enough, the market started to retrace, slowly slide higher. We went up here, created a little bit of a topping tail there on the charts, faded back down, came back in, bounced, came back down, tried to break down and just could not do it. And now look at the volume, folks. Look at this volume down here. It is minuscule, non-eventful here as we trade into the later portions of this Friday into the weekend. And there's just no one back at their desks, folks. Everyone, again, the big traders have left for the weekend, and you're going to stay with volume very light here. Again, you don't expect any sort of down move really into the close based off that. It would be a surprise if you had a sell-off from this point on. Right now, the markets, again, are holding on the flat side, and that's most likely where we'll end. We'll end flat to positive. That's my guess on the markets here. Dow right now up about 9 points. NASDAQ is down 1.5 points, and the S&P 500 is flat on the day. So you have a very, very flat day across the board. What are some driving forces today in the charts? Well, number one, you have to look at the leaders on the day. Why is the market up today, or why is it, it's not necessarily up, but it's flat. Why isn't the market selling off? Because there are certain stocks out here that are dragging the market down, but then there are certain stocks propping it up. The first stock you have to look at as propping the market is Goldman Sachs. Financials continue to be very strong today. Goldman Sachs leading the pack, up $2 on the day. JP Morgan up 20 cents on the day. That's also helping lead the financials, and then leading the markets in unison there, higher, or at least on the flat side. So again, futures, I'm looking at the futures right now, down about 0.5 point. NASDAQ is down about a 1.5, as I mentioned. But in any case, financials a key leader here in the markets. In addition, what else would be leading the markets? Take a look at Apple Computer, folks. Up 90 cents on the day. Nice little gain on that, although it has started to fade here late in the day, ever so slightly, keeping the NASDAQ a little under pressure, as it is kind of the one that's leading to the downside, although it did lead to the upside in the last couple of weeks with major, major gains. Other stocks leading to the downside, folks, Amazon.com. We talked about a key level yesterday. I gave it to you in this video. This very video laid it out for you and gave you the level to short. All right, unbelievably so, folks. Listen to this. This is what I gave you guys yesterday. What I said was take this pivot high. You can go back to yesterday's free video, and I gave you this play in the free video. Take a look. Take this pivot high right here. All right, draw a line through the high pivot of the 29th, and look at what you get. Yesterday we hit it, today we gapped above it and then sold right there. Sure enough, that level was 33 to 33, 133 to 133.50 on the Amazon. And there again, it's just an example of how the charting that we do yields profits galore, all right? Watch that, see that. Again, I called yesterday a possible top on Amazon based off that line for a pullback. You're getting that pullback as Amazon's down about $1.50 today. What other stocks are doing today? A big player here is ExxonMobil. ExxonMobil is down about 45 cents on the day. It's coming nicely off the lows. And what you've seen is Apple starting to fade, Goldman starting to fade, but Exxon starting to scoop up here. Now, spot crude closes in about 50 minutes, so it'll be interesting to see where oil trades in and if it can prop it up at all anymore on the Exxon trade. But one thing I am seeing, guys, is the USO is under quite a bit of pressure today. Now, you might say, well, why is the USO under pressure today when the dollar is weaker? Great question. The answer to that would be demand issues. That Michigan sentiment was kind of a little alluding to the fact that consumers are not that happy right now. Consumers that aren't happy, that don't have jobs, oftentimes drive less, create less of a demand for oil. So you're seeing a little bit of pressure being put on oil today, down 68 cents on the USO near the lows of the day here. And you can see a beautiful little chart there on the USO. Very, very nice. Okay, so that's your USO. GLD, on the other hand, is also under pressure. Also a very interesting situation here when the dollar is lower on the day to see GLD down. Again, I still think there's been a rotation out of gold here over the last few days or even last week as people look for better places to put money, more players in stocks. Stocks, again, making more money than gold. People think there's no risk left in this market, that everything's hunky-dory, and that's driving people to pull money out of gold as well and put it to work in other areas like stocks, for instance. And that's part of the reason why I think we've seen a decent run over the last couple days in the market of really propping the market up and keeping it to go slightly higher each day. Now, again, all that comes together, folks, to put us in a basic place of where the markets today are flat. I've shown you some stocks that are strong like Apple and Goldman and JP Morgan, and some stocks that are weak like Amazon, and of course you have the other players. Research in Motion is down a little bit on the day, and a couple other players as well. We talked about ExxonMobil as well. Overall, let's take a look at the semiconductor area. Semis are flat to negative on the day. A little bit of an in-spirit up bear flag there on the charts, and that is the semiconductor index, the SMH. And not to leave anything out, but let's take a look at the RTH. RTH is up 61 cents today. Retail sales make sense that this would drive the RTH higher, folks. RTH up about 61 cents. Not a huge gain on that, but look, it is at the highs of the day, and that is keeping things positive as those retail sales came out this morning pretty nicely. Now let's go back to the SPY and just summarize here, folks. Right now, you're hovering right in this range. You can see chopping around this green trend line of resistance. You are above it right now, which to me tells me there's a high probability that you do move higher into the close. All right, it would be somewhat of a surprise if we were to sell off into the close based on the light volume. So you have to say to yourself, Friday afternoon, they want to close this market flat to positive. They don't want to let it go into the weekend with a negative gain. They want to make sure the Dow closes above 10,600. That's another key level that you're watching as well, and you have to look at it in that perspective. Remember, a positive market into a Friday with strong gains for the week leads consumers, at least this is the mentality of the administration and the Federal Reserve, leads consumers to spend. Right now, you're above 10,600. Most likely, I would say you will stay above that. If it's sold off, that could be a very bearish signal going into next week. Keep an eye on it, folks. Have a wonderful rest of the day. I'll talk to you over the weekend. Take care.